Did Canada just dodge a trade war with the United States? Today we're breaking down how a single tax nearly sparked a cross-border economic crisis and what it means for the future of the digital economy.
Before we dive in, if you want daily updates on global business and tech news, make sure to hit subscribe and turn on notifications so you never miss a story.
Let's set the stage. Canada recently decided to withdraw its digital services tax, a move that's making headlines across both countries. This tax, introduced last year, was aimed at large tech companies, think Meta and Alphabet, charging them a 3% levy on digital revenues generated from Canadian users. The idea was to make sure these tech giants paid their fair share, similar to what we've seen in the UK and parts of Europe. But the timing couldn't have been more critical. The first payments were due this week, and the United States, led by President Trump, was not happy. In response, Washington halted all trade talks with Canada and threatened new tariffs if the tax wasn't scrapped immediately.
Mr. Trump took to Truth Social to make the announcement, saying in part, quote, "We have just been informed that Canada, a very difficult country to trade with, including the fact they have charged our farmers as much as 400% tariffs for years on dairy products, has just announced that they are putting a digital services tax on our American technology companies."
So why is this such a big deal? Well, Canada's economy is deeply connected to the U.S. About 3/4 of Canadian exports head south, including everything from oil to vehicles. On the flip side, Canada is the largest buyer of American goods, with trade between the two countries totaling over $900 billion last year. With so much at stake, the threat of a trade war sent shockwaves through both governments and the markets. Prime Minister Mark Carney and President Trump quickly moved to de-escalate.
Well, Canadian Prime Minister Mark Carney says trade talks between his country and the U.S. have resumed after his government scrapped plans to introduce a tax targeting U.S. tech firms that was supposed to come into effect today,
agreeing to resume negotiations and target a new trade deal by July 21st.
Canada's finance ministry says both countries are aiming to secure a deal by July 21st.
As soon as news broke that the tax would be dropped, the Canadian dollar strengthened, showing just how much relief this brought to investors and businesses.
Now, let's talk consequences. For the tech giants, this is a clear win. Companies like Meta and Alphabet avoid billions in new taxes, at least for now. For Canadian consumers and businesses, dropping the tax likely means avoiding higher costs for digital services, costs that critics argued would have been passed down the line. And for Canada-U.S. relations, this move diffuses immediate tensions and opens a door for renewed trade talks, which are absolutely vital, given how intertwined the two economies are. Of course, not everyone is happy. Some say Canada has lost leverage, but others argue it was the necessary step to protect jobs and economic stability. How does this compare globally? Let's zoom out. The UK and France have both implemented digital taxes, and the US has pushed back in those cases too, arguing these measures unfairly target American companies. In the UK, a 2% digital tax is in place, while France is still negotiating with Washington. Canada's decision to withdraw its tax may set an example for other countries facing similar U.S. pressure, especially as everyone waits to see if a broader international agreement can be reached. For investors, the impact was immediate. The Canadian dollar rallied, signaling relief that a costly trade war had been averted. Tech stocks with significant Canadian exposure, like Alphabet and Meta, may see a boost as the threat of retroactive taxes disappears. This episode is a reminder of how quickly government policy and international relations can move markets and affect company earnings. Last year, the U.S. exported $440 billion worth of goods to Canada and imported $477 billion. The digital tax would have applied a 3% levy on digital revenues above 20 million Canadian dollars per year, retroactive to 2022. But with the law now suspended and set to be repealed, those payments are off the table. So what do you think? Should countries have the right to tax global tech giants, or does it risk trade wars that end up hurting everyone? Let me know your thoughts in the comments. If you found this breakdown useful, don't forget to like the video and subscribe for more daily insights. And remember, this video is for informational purposes only. It's not financial or legal advice, so always do your own research